Hey, good afternoon, everyone. So today in the next 1 hour, I'm going to explain about some of the top indicators and some of the terms which you all should know to use them properly. So, right, for anything to understand properly, first thing is you need to understand the terminology. Once you understand the terminology, once you understand how the indicator works better, then you will be able to use it in a better way by yourself. So let me just start with a simple example and then I'll explain about the indicators like RLM, FLM, SLM. So let us say, right, you want to buy a land in your city, whether you are in Dallas or Houston or wherever you are. You want to buy a land near your home. Let us say the normal price is 100K for that particular piece of land. So that is also called as fair value price, right? That means that is a price generally people are ready to buy, right? It is not so cheap or so expensive. 100K is a standard price for that particular, whether you can call it as a land or a rental, right? Your rental home or something. But just for example, we'll call it as a land. You want to buy some land. 100K is like your base value or fair value price. That means that is the price where most of the people in that community are buying the land at 100K. There might be some people who might be very good negotiators. They might be buying at 95K. There might be some people who don't know how to negotiate. They may buy at 105K. But 100K is the standard value or 100K is the base value. So if let us say price, you are still thinking whether to buy it or not. Right after 1 week, you came to know that the price went to 105K. Then will you be interested to buy that land or from 100K or after a month it moved to 105? So what do you want to do at that time? Do you want to still buy it or you don't want to buy that land? You can, so comments are enabled. So what do you want to do in that scenario? From 100K within a month, the value of the land increases to 105K. So 100K is the base value price. So suddenly there is some news that some companies, Disney is starting in that area, or some Oracle or some Microsoft is going to set up some office or something. So generally, or right, okay, if you think like 5,000 is too much hike, let us say from 100K it went to 101K, right? It went up $1,000 in a month. Then you feel that, oh, there is demand is going up. So there is a high possibility within 1 month it went up by 1%. Immediately you will get a FOMO or you want to buy that. So then there will be more people who will be interested to buy that, right? Because from fair value price it went up little more. When it was at a fair value, you don't know whether it can go down or it can go up. But suddenly after 1 month you observed that it went from 100K to 101K. So you saw that there is a demand, more and more people are buying. That's why the price is going up. So there is a high possibility 80% of the people will be interested to buy at that price. And suddenly it went to 102K by next 1 month. There might be a few more people who will be interested to join. Then it may go to 103K like that. But suddenly from 100K, let us say it went to 110K, right? Within a month it went up by 10%. So what do you want? What do you do at that point of time? Do you want to still buy? So within a month, suddenly, generally, normally it should go 1% in month or 2 months, but suddenly it went up 10% within a month. You are still thinking whether to buy or not. Suddenly it moved 10% up. Right? There is generally when something goes up so quickly, there is a high possibility for a correction. Right? There is a high chances of a reversal on the price. So that's what you need to understand whenever you want to use this RC level manager, futures level manager, stocks level manager. There is something called as a base level or a high volume level or a magnetic level. That is like your fair value price, right? Let me just show you an example so you will understand better. So let us first understand the terminology and then. So with futures level manager or RC level manager or stocks level manager, you have something called as a base level, or which is also called as magnetic level or a high volume level or a fair value level, because that is the price where there is a lot of transactions, right? A lot of buyers are ready to buy. So that's why it is called as a high volume level or a magnetic level. So suddenly it went up 101 and again came back to 100K. Again, there will be more people who are interested to buy. So that's why it is called as a magnetic or a high volume or fair value level or a base level. So this level always acts like a magnet, right? So price generally whenever price is here, that is a good price to enter the trade or good price to uh, that is a fair value price for you to start thinking whether to buy it or not. Then generally above this fair value level or a magnetic level, you have 8 levels which are called as resistance levels, right? R1, R2, R3, R4, R5, R6, R7, R8. That means, right, for example, 101K is your R1, 102 is your R2, 103 is your R3. Let us say 110K is your R8. In the same way, there are support levels below the base level. So if your 100K is the base level, then 99K is your support 1, 98K is support 2, 97 is like your support 3, 95 is like support 4, 90K is like support 8. So at the base level, you have above the base level, you have 8 levels up and 8 levels down. So above the levels are called as resistance levels. Below the levels are called as support levels. That means if it goes all the way to 90,000, then there will be a lot of buyers who want to buy it, right? Big companies may want to buy because they know the fair value price is 90K. Sorry, fair value price is 100K. But because of some reason, because there is a lot of layoffs, a lot of sell-offs are going on, people are selling their land, suddenly price dropped all the way to 90K. Then there might be more people who some big company may come and buy huge number of lands, huge number of plots there. So one thing you need to understand is when you are at a base level, still people will, that is a good point to buy, but still they won't get a confidence because the base level is very close to the support level 1 and also resistance level 1. There will be some people who may think that, oh, it came to 100K, it may go to 99K or 98K, let me wait for some more time. Suddenly it goes to 101K. Then the FOMO comes in, right? You thought like it will drop to 99, but suddenly it went to 101. So then there might be more buyers at that level. So that between base level R1 and S1, that is called a choppy zone or a sideways zone. That is like where people, you cannot exactly decide whether to buy or not. But when price goes above that 101 or above the R1 level, then your R2, R3 are very good levels where you can buy at 101, you can easily sell at 102 or 103K. In the same way, suddenly from 100K it drop to 99K. Let us say you already have a land. Then that is a good point to sell because within a week or two it may drop to 97K. So now let us, using this analogy, let us look at an example so you will understand better. So for example, RLM, right? Once you understand RLM, the same concepts we will use for SLM or FLM. So every day what we do is, right, every day by looking at the open interest levels and all those things, I give you something called as your what is the base level or what is the fair value level for different stocks, different pickers, and then I give those levels for you in a notepad file. So what you need to do is just you copy those notepad file right? Do a control C, control V. So then it is giving you all the what is the base level, what is R1, what is R2, what is R3, R4, until R8. In the same way, S1 to S8. In the same way, right? Not only for different futures, this RLM you can also use for different major indices, major stocks, like that. So for example, right, mainly we use it ES, NQ, YM, RTY, FDAX, crude oil, right? Because there are some members who are from Europe, so I give this FDAX levels. Then CL, GC, silver, copper. These are the most important future tickers where there will be good volume every day. In the same way, there are some stocks, right? Out of thousands of stocks, there are some stocks like SPX or SPY, QQQ, NDX, Nvidia, Tesla, Amazon, Google, Microsoft, Apple. These are the one Meta. These are the ones every day we'll have good volumes. So we look the open interest for all these things, and then I give you what is the base level, what is the resistance one, what is the support one. So for example, when market open, right? For example, on Friday, when market open, right? Here you have all the levels, right? This is the base level, right? That means that is the market bias. This is like your 100K price. This is your R1. This is your R2, right? This is your R3, R4, R5, R6, R7, R8. In the same way, below the base level, you have S1, S2, S3, S4, S5, S6, S7, S8. So when market opens, right on Friday, when market opened, it opened somewhere close to S7, S8. Right, there was a huge gap up, right, overnight. SPX or ES, right? There was a huge gap up here, right? On the Thursday, it went all the way down. Friday morning, when market opened, it went all the way to nearly S7 and S8, right? R7 and R8, close to the high of the day. So as I gave you that example, so there was a huge bounce. There was a lot of big move, right? On the previous day, it closed at 68.44. Next day morning, it was nearly close to 68.95. So because of such a huge gas, suddenly it went up so much overnight, right? Where on the Thursday afternoon, it closed at 68.44. When it opened close to 68.88, and then did some manipulation, and then it went to 68. That means it is nearly close to the high of the day, or R7, R8. So that's where, right? Now you can think about that analogy. From 100K, suddenly it went so much high. Then what people will do, suddenly you bought 100K, within a week, you went to 110K, you want to take the profits. Because generally within a week, it should go up by 1%. But within a week, it went up by 10%. You want to book because there can be a correction. Because suddenly price moved so much, there is a high possibility for a drop. Right? If there is a huge move during Europe time frame or during overnight, generally there will be that means from base level, your base level was somewhere here, but price opened somewhere close to the R7, R8. So that's where you will have a correction. So generally in the same way, right? For example, if you see Google, get all these levels even before, right, market opened itself, you get all these levels. So we are not looking at where market is opening, right? It opened nearly above the R8. Immediately there was a huge drop. So if whenever you enter these levels, suddenly you see price above R7, R8, then immediately you can do bear calls and make profits. Or suddenly when you open that market opens, you see price somewhere below S7, S8. You can do the bull puts or you can do the calls. You can make profits. For example, the price is opening somewhere at base level, right? That means it is not so much going up or so much going down. It is at base level. Then what we need to do? We need to wait for price will be choppy for some time, right? Initially it will move up and down, up and down. And then you have to wait for price to either break this price. Once it breaks R1, then you can enter the long position. Then you take profit one. your take profit too. Or from the base level, it is going all the way to S1, drops below S1, then you can do S2 and S, right? You can short it, you can sell it, and you can take profit here, and then take the second profit here. So generally on normal days, right, if there is no major event, no major news, right, there is no war news, no Venezuela news or anything, generally your price always goes until R3 and then drop. Or if it is a bullish ticker, it will go to R3 and then it will drop to R2, R1 base level. If it is a bearish ticker, it will drop all the way to S3 and then try to go to S2, S1 base level. So if it is a normal day, a choppy day, a sideways day, or for example, there is some FOMC event or there is some payroll event, ADP payroll event or something. If there is a major good news, it may go all the way to the top, right? It may go to R7, R8 and then drop. Or it may, if there is a negative news from the news event at the 7:30 a.m. Central, it may come all the way down till S7, S6 or S8 and then it may bounce. So how do you know whether there will be a reversal or not? So one is these key levels will help you to understand, right? I hope everyone is getting it. Base level is like your fair value price. If it is close to the fair value price, you don't enter anything. Only when it breaks this R1, you can buy it, you can take profits. Or when it breaks this S1, you have to sell it, take profit here, and take some more profit here. If it is a normal day, if it is a range day, or if it is some event day, and if there is a negative news, when it breaks S1, it may come all the way to minimum you can target until S6. You can take profits at S6. In the same way, if it is a good news, positive news, and if it starts going up R1, R2, R3, you can take profits at R6, R6 level. That is a high possibility. The trend will be much more higher, right? From 100K, it may go to 107, 108, 110. Suddenly, there is a good news, right? Then, if there is no news, it may just move 1%, 2%, like that, very small move. But if there is a positive news in that area, then suddenly the land prices may go up. Or if there is a negative news that some companies are thought of opening a plant, but they are not opening their office, suddenly there can be a big drop. So, so you have multiple, right? So first thing is when I provide the notepad files, you enter those levels, right? That is your the step number one. And then you wait until the market open. When market opens, right? Market open means 8:30 a.m. Central. That is where you see where the price is, right? If the price already is close to R8 or above R8, that means wait for a bearish candle, right? Already when market opened, it was already at the top. Now, don't, right? This is, so if you see these candles, so here you have a bullish candle, right? Wherever you have a huge body with small wicks, that is bullish candle. But already you are at the R8. That means already it moved so much high overnight. From nearly $310, it went to $320. So that is where it is very important for you. If it was only at 310, 311, 312, then there is a possibility for it to go up. But already it moved so much high. So then there is a high possibility for a reversal. Right? That is very, very important. So whenever you see that, you see a nice bearish candle, right? You can see, or you see one or two red, right? It was on the top of the band, then it started coming inside the band. So this is your proper reversal signal, which tells you that our price moved above the R8. Then you got a swing sell, you got a overbought signal, and then price went up and you got a nice bearish red candle, similar to an engulfing candle with a small big body with a small wick, another big body with a small wick. Then you can buy the puts. Right? Same thing happened for SPX. Initially, when market opened, suddenly there was some first 15-20 minutes, there will be a lot of up and downs. But once you wait until 15 minutes, you see that price is already above R6 or R7, near close to R7. Right? From the base level, price moved so much high overnight. That means there is a high possibility for a reversal. then you can do bear calls, right? Then price will generally come all the way to the bottom, and then it's whenever it starts moving, you can do the bull puts. So like that, this RC level manager will help you. So the first thing is you need to understand where your base level is. And then, so that's where it is very, very important. So if price is opening, when market opens, if it is close to base level, then, and if it starts going up from the base level, that means that is a good time to buy. But already when market opened, already it moved at so high, it is at somewhere at the top. That means that is a good time to short, right? So when it is just above the base level, if it is close above R1, you can buy. Your R2 is your target one, R3 is your target three if it is a normal day. But every day at 7:30 a.m. Central, or most of the days, Tuesdays, Wednesdays, Thursdays, you have some event or other like ADP payroll or something. So based on that, sometimes if there is some major news, already stock price may go up so much high. So that is where it is very important for you. So generally, most of the time, the mistake what we do is we see that, oh, price moved so much high, right? We try to buy at the top, right? But already it made such a big move. That is where we should generally look for the shorts. It is so much above the fair value price. I hope it is making sense. Is it clear? Right? We need to, these levels will not be available on internet. So these are coming from a proprietary tool. So using the proprietary tool, we derive where is the base level, where is R1, where is R2, where is R3. So if price is just above R1, market opens, good time to go long. You can buy calls, you can do bull puts, you can go long on futures, you can buy stocks, all those things you can do. But if price already at somewhere at, if it is a normal day, if it is already at R3, there can be a reversal. If it is an event day, right, that means there is some event, right? If you go to forexfactory.com, you can see what are the events on the day. So at 7:30 a.m., there might be some payroll report, or there might be some FOMC report, CPI report, PPI report. Suddenly there is some news. Suddenly market will go so much high if there is a positive news. Because market moved so much high, most of the retail traders will think market will bounce much more high. But even before the market open, because the news is at 7:30 a.m. Central, by 8:30 already it made a huge move. So when market opens, first 10 minutes, it will try to do some manipulation, try to, right? They try to even, right, on Friday also, you can see that market opened up big because Thursday it went down. We expected that Friday we'll see a nice bounce. Exactly it happened. We had a nice bounce. For first 15-20 minutes, they do manipulation, right? So that retail traders will fall into the manipulation. They buy the calls here. They buy they long the stocks. Suddenly big companies will drop because already it moved nearly 7 levels up from the base level. So it is very, very important for you to understand where the price is before you plan to buy. If it is somewhere close to R1, you can buy. You can take profit at R2 and R3 if it is a normal day without any events. If it is a event day, then if there is a positive event, and if price is still at R1, then you can wait until R6 to book the profits. If it is a negative news, it may drop all the way to S6. But already at the market open, if it is at R7 or R8, you can expect a reversal. That means you mainly look for the shorts. If price is already at S7 or S8 on an event day, you look for a reversal. If it is a choppy day or a normal day without any major events, your S3 will be a reversal point, your R3 will be reversal point. So generally they move 3 levels up from the base level or 3 levels down from the base level. If it is a normal day. If it is a major event today, they will go to 6 to 8 levels up or 6 to 8 levels down based on the positive news or negative news. So with RLM, you can use for both futures and also different stocks. Whereas, so this is a premium indicator. So if you have 6 month subscription, then you can use this RLM. If you don't have 6 month subscription, if you have just a 1 month subscription, and this FLM is mainly for futures, right? That means if you use ES or NQ mainly for prop firm trading. So for example, ES at market open, it was already at, if you see the levels, here also you just paste the futures levels in the FLM, right? FLM stands for futures level manager. That means it will tell you where are the levels. Once you post the levels, when market opened, already it is somewhere at, right, it is close to R7. So if it is close to R7 and you see, right, you are not just looking at the level, you are also looking at the price action, right? Initial first 10-15 minutes, there was some green candles. Then the size of the green candle started going down. There were some 1, 2 big candles, and then slowly they became smaller size, and then red candle started. That means the reversal starts, right? The big company started selling big. That means you mainly look for the short signals. So you got a swing sell, you got a resistance sell zone, the cloud started turning red. That is where you look for the sell opportunities. So like that, whenever, whether it is SPX or ES or whatever it is, with RLM, whenever market opens, you watch for first 10-15 minutes, you watch the levels. You see whether is it at R1, R2, S1, S2, or is it already at R7, R8, or S7, S8. If it is somewhere at R1 or S1, then if it is opening at base level, then you have to wait until it breaks R1 to go long, or wait until it breaks S1 to go short. But if it is at already at R7, R8, or S7, if it is at R7, R8, you watch for the shorts. If it is at S7, S8, you watch for the long positions. So that is one key logic you all need to understand to use RLM, SLM, FLM, right? Remember about that land example. This 100K is your base level. 101K is your R1. If you from 100K it went to 101K, that means still there is a potential for it to go up. So you can sell it, you can buy it 101K, you can sell it 102 or 103 or 104. But already suddenly from 100K, even before you are still analyzing, it went to 110K. So there is a high possibility people will start booking profits. Within a week, they made $10,000 profit. So a lot of people will try to take the profit because once it moves so much high, the chances of going up is less, right? There will be always a reversal, a retracement. There will be always a correction, right? Whenever suddenly house prices, right? Dallas, there was a lot of boom in the real estate during COVID and other things. Now, slowly there will be a correction. So whenever something goes up very quickly, there is a high chance for a correction. So that's what you need to understand. These levels will help you to determine whether you should focus on the long positions, whether you should focus on the short positions, whether you should do bull puts or bull bear calls or puts or calls based on where the price is opening on the day. So if your first thing is you are watching where is the key level, am I at R1, R2, R3 or R7, R8, and then at the key level, what is happening? How the candles are changing from bullish candles to neutral candle. If the wick is big and very big at the top, bottom, that means they are neutral candles. They are neither bullish, even though the color is green, but basically it is like a neutral candle, right? Buyers try to go up, sellers brought it all the way down. Buyers try to go up, sellers brought it down. Buyers try to go up, sellers brought it all the way down. Then suddenly the color also changed. The body became big for it. So that is called as price action. How the price is changing. Suddenly from green, some nice bullish candle, suddenly they became indecision candles from bearish candles. That means it went to a key level where there are a lot of sellers. It went to R7, then it started dropping. If you see NQ, right, all these levels are given on Friday morning itself. So, right, we are not doing something after market open, even before market open. So it opened at S8 or R8. Then immediately it started dropping. So like that, you can see any example for any day, last a few months. right? Every day you get these files. So generally 99% of the time the price stays within between this R8 and S8. And if price opens at R8, there will be a big drop. Or if price opens at S8, there will be a bounce. If price opens at base level, then we have to wait either to break R1 or to break S1 so that you know, because at base level it is like a, right, you don't know whether price will go up or not. So if price tomorrow opens at base level, then we need to wait for it to see whether it will go above this or below this. If it goes above this, then it will definitely go to R2 and R3. This is your take profit 1, take profit 2. If it breaks S1, then it will go to S2 and S3. So that is how this RLM, FLM, SLM, right? RLM is for futures, stocks, options. SLM is mainly for stocks and options, whereas FLM is mainly for futures. So this indicator is mainly for your prop firm trading, right? If you want to do prop firm trading, this is the best indicator which you can use. So main thing you need to understand is what is the trend? Is the trend, if it is just above R1, trend is bullish. But if it is already moved so much high, then there will be definitely a correction. If it just below S1, we can still take the shorts. It will go to S2, S3, S4 like that. But if it already opens somewhere at around S7 or S8, then wait for a reversal. Wait for a nice green, bullish green candle. Then you can buy the calls, you can do the bull puts, you can go long, you can buy the stocks like that. So if you see Meta example, right, Meta or Google or Microsoft, whatever you see, you can see, right, every day you have levels. Only thing is correlate with the real estate example, right? From 100K, is it at 101K or 110K? If it is already at 110K, there will be a reversal. Don't try to buy at 110K. If it is from 100K, if it is went from base level, it is just one level up, then still there is a buffer or potential for it to go up. But suddenly it already moved so much high, the chances for a drop are very high, or it dropped so much, then the chances are big for a reversal. So the price always stays within a range, right? It won't go generally on a normal days, it has to go 2 or 3 levels up, 2 or 3 levels down. But if there is a major event, some major news, it may go 8 levels up or 8 levels down. So if price is opening at around 7 or 8 levels up or 7 or 8 levels down, they are the reversal trades. If price is opening just above the base level, then you go by the trend. Or if the price is opening just below the base level, then you go by the trend, right? That means you take the shorts, right? I hope that is clear for everyone. You don't need to refresh the script. You have to just uh, enter the level. That's it. You get these levels in a notepad file. You have to just copy paste. Open the notepad file, do a control C, and then come here and do control V. That's it. So it will also tell you where is your strong resistance, what is the RSI, what is the strength, what is the previous day high, previous day low, all those things. But the main thing for you to determine the trend, determine the direction is understanding, are you above the base level or are you above the. So for example, let us look at GC. So right, GC went to R3 level and then started dropping. Right at around market open 8:30, it was close to R3. So your major reversal levels are R3 on a normal day, R6 and R8 if there is a major event day, or in the same way S3 and S6 and S8. Those are the reversal points. That is where if it is a normal day, it will come all the way to S3 and then start bouncing up. If it is a major event day, it may come all the way to S6 or it may come all the way down to S8 and then revert. So once it comes to S6, then you wait for a bullish green candle. Or if it goes all the way to R6, then you wait for a bearish candle, a big engulfing candle, right? Where the candle is huge, right? For example, yeah, this was before market open. So yeah, at around market open, then we can see there was a swing sell and there was a huge red candles. And also you have clouds which represent what is the trend. If the clouds are red and orange or maroon and orange, that means trend is bearish. You mainly watch for the puts or you mainly watch for the sell signals. If the clouds are green and blue, then generally we look for the bullish trades. So one is you are looking at the colors, but also you are looking at the levels, right? For example, the cloud might be green and blue in the morning when market opens. So here the clouds are green and blue. But you are not just looking at the color and deciding that, oh, it is green and blue, let me go along. Already it is above resistance 8, right? So that's what is important. You are not just looking at the colors and deciding to do a buy. So you are buying somewhere, right? You don't want to buy at the top of the band or at the premium price, right? From suddenly yesterday it was going at $313. Within a overnight it moved to $320. You don't want to buy where it already moved nearly 5-6% overnight. So that's where it is very important, where these levels will help you to tell that our price can reverse at any point. It moved all the way so much, so there can be a reversal. So instead of buying calls, if you buy puts, you will make nice profits. So like that, this will help you, right? These levels will help you, especially first half an hour, 1 hour also. You can use the levels. You see where the, so you have an indicator like MTF future scan. So for example, when market open, you can copy paste your levels, and then for example it already shows that our ES is at R7 or something like NQ is at R8. Then you know that there can be a huge possibility, right? You don't need to go to one by one tickets. By just adding those levels, just like whatever levels we pasted in FLM or RLM, you paste the same levels here. So instead of going to each one to know which one can reverse, by looking at this table, if you have some R7, R8, or S7, S8, then you know that there is a high possibility for a reversal. Or something is just at R1, right? Let us say GC is at just R1. That means there is a possibility, right? When market opens, if it is at R1, there is a possibility for it to go to R2 and R3. Or silver is at R1, then it may go to R2, R3, R4 like that. So this will tell you which ones you can easily focus. Right? I hope it is making it right. Otherwise, you have to go to ES and see, okay, is it at R1 or R2 or R7, R8? Should I look for long? Should I look for short? Like that. But when you have the scanner will tell you, okay, out of all these tickers, this is already at S8. That means there can be a reversal. It can again start going up. Or this already moved so much high at R8, so it will drop. Or this is just moving up now from R1. So it is waiting at R1 level. So there is a high possibility for that to go to R2 and R3. So if something is like R1, RSI is strong, the strength is strong, that means very high possibility for it to go up. Right? When market opens today evening, there is a high possibility GC silver may go further high. So like that, the scanner will help you to determine which one you, right? If something is at R8, that is a good ticker for you to take short. If something is at S8, that is a good ticker to go long. Or if something is at just R1, R2, that is a good one to go long. If something is at S2, right, or S1, that is a good one to go short, right? Is it making sense? Right? Is it clear? So one more time I repeat, right? Whatever I explained, there are 8 resistance levels above the base level, which are represented as R1 to R8. There are 8 support levels below the base level, which are represented as S1 to S8. Every day, using the open interest and other factors, we determine what is the base level R1 to R8, S1 to S8 for all major futures, indices, stocks, and provide the levels by 7:30 a.m. You just need to copy paste these levels before 8:30. At market open, if price opens close to the base level, wait for it to break R1 to buy the instrument or open the long opportunities. R2 and R3 are your targets. If price breaks the S1, then sell the instrument or short the instrument. Then S2 and S3 are your targets. On choppy days, generally price moves from base level to R3, R3 to base level, or it goes to S3 and then come to base level. But when market opens, if price is already close to R6 and R8 levels, wait for a bearish engulfing so that you can sell it. Or when market open, if price opens close to S6 to S8 levels, wait for a bullish engulfing candle to look for the long opportunities. So, and then clouds also will give you the confidence, but mainly the levels is what will determine. So the clouds will help, but already if it is at R8, even though the clouds are green and blue, that is not where you have to buy the long position. If the clouds may be red and orange, but already you are at S8, then that is not where you have to buy the, uh, that is not where you will short it. So again, right, RC level manager mainly for your scalping, day trading, futures, stocks, and options. Right, we use 3 minutes in Asia and Europe time, whereas we use 5 minutes in US market. Futures level is mainly for futures. RC stocks level is for stocks and options, whereas RC level is for everything. So that is your first, right? The concept is same for RLM, FLM, SLM. Basically, using the levels you determine. So out of not only you, right, one is using the levels. Second is your scanner will help you to determine out of this which one is the best one. Right? If something is at S8 or R8, that is the best one. Or if something is at R1 or S1, they are the best ones. If something is R1 and RSI and strength are green, that is the best one to go long. If something is S1 and RSI is, right, let us say NQ is at S2, RSI is below 50, strength, let us say strength is also around 20 or more, then that is a good one to go short. So that out of 10, 12 tickers, you know, okay, out of this, which one is the best ticker to focus? So you can make nice profits. Right? I hope the rules are clear. Based on different factors, we will know what is the base level, what can be the maximum, what can be the minimum for the day, what are support levels, what are resistance levels, what is the base level. So in the same way, for stocks also, we can do same thing where, right, you put the levels for different stocks. So for example, Amazon is at S8, Microsoft is S8. That means there is a high possibility if market open, you see them at S8. There is a high possibility for a reversal on those. Let us say Tesla is at R8. There is a high possibility for it to drop. So like that, by just using the scanners, you can know which ones are the best ones to look for the day. So that is about your RLM, FLM, SLM, and also future scanner, stock scanner. Right? The scanners will help you out of all these 10 different tickers or multiple 15 tickers, which ones are the best ones to go long, which ones are the best ones to go short. If something is at R1, R2, and RSI is good, strength is good, they are the good one, they are the best ones to go long. If something is S1, S2, and RSI is below 50, strength is good, they are good ones to go short. If something is already at R8, then there is a high possibility for a reversal. They are good ones to go for short. If something is S8, that is near the low of the day, and if RSI is green, that means there is a high possibility for it to go up. So by looking at the scanner, you know, okay, out of all these tickers, Microsoft looks good for tomorrow, Amazon looks good for tomorrow, because it already dropped so much, there is a high possibility for a reversal on those. Then let us look at the other one, right, which is our tag and turn. So if you are not like a scalper or you are not an active trader, you already working in a job or something, you cannot look at do quick scalping. Then this is something which is good for such type of traders who cannot keep watching the chart throughout the day, but they can do some, right. They cannot do same day trades, but they can do for next day or 2 days or weekly like that. This is a swing or short swing indicator where you open the trade and you can hold the trade for long time. So this is mainly good for personal accounts where you can hold the trades for 1 2 days or 5 days like that. So this how this indicator will work. So whenever price drops all the way, right, this ES dropped all the way, then again then it started moving up. You get a bullish tag and turn. Right, we did bull puts on Friday. We took 68, 68.35, 68.45, and then price went all the way up. Then we made all the profits. So when you get a bullish tag and turn, then immediately it will show you that okay, this is above 68.72. It will go to 68.87, 69.02, 69.17. These are the targets. So bullish means it is you can buy it, you can go long, and this is the stop loss. It is telling if price breaks below this level, you take the stop loss. Otherwise, you can hold until all these three. Generally, it will not directly go to, generally it will go to target one, then there will be small reversal, and again go to target two, small reversal, again go to target three, and then there can be reversal. So, but minimum for personal accounts, you can hold until this target 69.17. Right? For example, if you see SPX, so you got a bullish tag and turn, right? It started going up. Then whenever you see bullish tag and turn, you can do the bull puts. It is bullish above 68.30, 68.47, 68.64, 68.81. It went all the way to 68.64, target 1, target 2, target 3. Then because already you got some nice move, big move, then there was small reversal. And again, it may go all the way to 68.80 tomorrow. Right? That is your target 3. If it breaks this target 3, it can go to 6900. Otherwise, minimum we can expect until 68.80. Right? This is 68.81 is your target. Same way, for example, if you look at Google, so it went all the way to the top, you got a bearish tag and turn, right? Then you got a target 1, target 2, target 3 for the shorts. Then it came all the way down. Then you got a bullish tag and turn. Then this is your target 1, this is your target 2, this is your target 3. So it went to target 2 and then small reversal, and then again tomorrow it will go to target 3. If it breaks target 3, it may go all the way to this resistance area. So now you know where to put your stop loss, where you can book your, where, right, you can buy 315 calls or you can buy 320 calls based on you have. It is telling that if price is above 311, then 313, 315, 317 are your potential targets. You can buy the stock, hold them. So tomorrow we may see a nice bounce on these ones. So for example, let us go and watch SYXL. So price went all the way up. So here also you have another indicator which is showing it is overbought. Now price is you got a bearish tag and turn. That means price went moved so much high. There is a possibility of reversal. That means you can buy the puts. This is target one, target two, target three, and this is the stop loss. So if it you short it here, if it goes some $1 or 80 cents, 90 cents above, you book the stop. Otherwise, there is a high possibility for SYXL to drop all the way to the bottom. In the same way, whenever you put any ticker, then it will tell you whether it is bullish or bearish. For example, TSM moved so much high. Then there is a correction. There will be a reversal, retracement. So it is telling if it breaks below 321, it is bearish. Your target one is 319, 317, 315. Like that, whichever ticker you want, you can put the ticker and it will tell you whether you have to buy it or you have to sell it. For example, GC, right? It is bullish above 4316. Now it is 4340. So the targets are 4336, 4357, 4377. That means if you are a personal account holder, right? If the prop accounts, you cannot do in 30 minutes. You can do micros. You can do MGC whenever it touches 4316 start moving up, you can do micros, but you cannot do minis in a personal account on a 30-minute time frame. So if you have a personal account, you can hold until minimum until 4357. We may see 4357, 4377, mostly today night. We will see gold going up all the way to, right? This is where you have uh, target 1, target 2, target 3 for gold. In the same way, silver, right? Above 71, it will go to 72.17, 73.22, 74.28. There is a high possibility we'll see a nice bounce on silver tonight. Minimum is target 1, target 2. After target 2, there can be, right? It will come back to target 1 and again go to target 3. It will not directly go to target unless there is a major good news. It will go 1, 2 levels and then 1 level down and then again go further up. So like that, you can use the tag and turn. If you are more of a swing trader, you don't want to do keep watching the chart, you don't want to do day trading or scalping, you want to hold it for a day or two, then this is the indicator for you who want. So you have to use 30 minutes time frame, and whenever you see that it is bullish above, then that is where you buy it, and then you put your target here 72 and 73, or minimum you can go until 73 is your target, stop loss is 70. Then you don't need to, right? You can go to order tab, you can put your target and stop loss, and you can let it run. You don't need to keep watching the chart. Like that, let us look at some more examples. Market, if it goes below $9, it can drop to 8.49 tomorrow. As of now, it is still not bearish. It is only bearish below 9.04. Let us look at some crypto stocks. 11.58. If we get a nice bearish engulfing candle, you can buy the puts for CLSK tomorrow. If we get hut. So one is you look at the levels. Second is you also look at, so here you got a nice bearish engulfing candle, right? Price went all the way to the top. You got a nice bearish engulfing candle. Tomorrow, mostly it will go all the way to 49.67, right? Hut is a crypto stock. So we may see a drop with hut. It will go to 51, 50.57. Let us look at some more Bitcoin ETF. So this is, you got a bearish tag and turn. So here you got more coin. T5 also gave a sell signal. So there is a high possibility this is target 1, target 2, target 3. There is a high possibility we'll see it going all the way to minimum 12.27. So you can buy the puts, you can short the stock, you can do different things where the price may drop all the way to here. So if you are more of a scalper, you use RLM, SLM, FLM along with future scanner or stock scanner. If you are more, you want to do prop firm trading, but you want to do more of a swing trades where you don't need to keep watching the charts, then this is the best one, SPX tag and turn. So earlier we didn't have this target, so I updated this one so that you can set the targets, right? Sometimes it may go only till the midpoint, right? But we try to wait for it to go all the way to the bottom and suddenly it may, right? It may come all the way to the midpoint and then again reverse back. So that's why it is better you book most of your profits here. If it starts dropping, then you can enter one more time. So like that, I already shared you multiple examples. So if you see GBTC, right, tomorrow you'll see most of these will drop, right? You got a bearish tag and turn, bearish below 70.61, target is 70, 69, 69. That means you can buy the puts, you can do the bear calls, you can short the stock, you can do multiple things. If you see NKD. So NKD bearish below 51,315. That means that is where it is a resistance. It should go above that. And then if it starts dropping, if you see a bearish engulfing candle, you can do shorts. Once it goes above 51,315 and starts dropping, that is where we can take shorts. If you see RTY, it is bullish about 2513. So that's why we did IWM calls, IWM bull puts. Uh, so 2516, 2519, 2522. So if it goes to 2522, there is a big strong resistance. We may see a reversal on RTY tomorrow. So like that, this will help you to hold the trades for much longer duration. You can hold for 1 day, 2 days like that with the SPX tag and turn. So if you are more of a swing trader, you don't want to keep watching the charts, this is a good one, which will help you to know whether it is bullish or bearish, and you know where your targets are, where you can take the profits. Generally, it will go till the target 2, and then it will do a small reversal and again go back all the way to target 3. So like that, right, I don't want to explain more and confuse you, but SPX tag and turn is more for your swing trading, more where you can hold the trade more than a day. Whereas RLM, SLM, FLM, along with the scanners, they are good for your day trading or scalping. Based on where the price is opening for the day, you can determine whether it is bullish or bearish. So it is not that always when price is above the magnetic level or base level, it is bullish, right? If price already going to R8, then there can be a reversal. Or if price already dropped all the way to S8, there can be a reversal. If it is a normal day, right, it is not a choppy, it is not a major event today, or there is no major news in the market. Then R3 and S3 are the reversal levels. Only if there is some major news or something, then R8, S8 are the reversal levels. If not, if it is a choppy day, sideways day, that means there is no major news or major event on the day, then R3 and S3 are your reversal points. On those days, it will just move little bit and then again reverse from that level. So yeah, please use this information. So because generally sometimes I start live sessions much late, right? So by that time, because if you use this information, you wait for first 15 minutes. After that, you see where your levels are. Is it at R8? Is it at R1 or S1 or is it S8? Based on that, you can start taking the trades. Then you can make nice profits, whether you do calls or puts, right? If possible, tomorrow I'll try to open the session early, um, so that, right, whatever you learned tomorrow you can see in the live in the real time, where you can see how these levels will exactly help you to catch the trend or catch the reversals at right time. Yeah, I'll share the slide deck in the premium channel. So let us look at Sophie. So if you see Sophie, right, Sophie already, right, this is bullish target. Target 1, target 2, target 3 are done. It broke the midpoint, then it went all the way to the top. There is a high possibility for a reversal tomorrow. We may see, if you see a nice bearish, right, these are bullish engulfing candles. So if you see a nice green candle with a small wick, those are bullish candles. So as of now, you don't see any bearish candle. If suddenly you see a nice bearish candle, and then you see generally you get a bearish tag and turn, then we can open puts for Sophie. Mostly tomorrow we may see Sophie reversal on Sophie. So for swing trading, you don't have any clouds, right? For swing trading, so this is your seller's area, right? If you have a red background, that means it is overbought now. Suddenly, at any point of time, sellers can start selling it off. This is your buy zone, right? If you have a green background, that means that is where buyers are buying it. That is where you look for the long opportunities. This is where you look for the short op. So whenever you get a nice bearish engulfing candle here, then you can buy the puts for Sophie. So we use RLM, FLM. For example, if you use RLM, still the clouds are green, but you have sell zone here. So if you see a nice bearish engulfing candle, then it may break these clouds and go all the way down. It may come all the way down to 2026. Minimum, it will come to 26.5. Minimum, we may see $1, $1.5 drop tomorrow. As of now, it is still bullish, right? This is where you have sellers around 27.8 is where we have a lot of sellers. So it may go all the way to 27.8 and then we'll see a reversal tomorrow. So one more thing you can do is, right, that is the best way where you can do both swing trades and so you divide your chart into two parts, right? In one chart, what you do is you just enable. I explained this many times. So especially whoever are having a hard time clearing the prop accounts. So in one chart, you use 30 minutes time frame. This will tell you what is the trend in the higher time frame. In the second chart, you use RLM. You use 5 minutes here or 3 minutes. If it is Asia market, Europe market, use 3 minutes. Otherwise, use. So for example, here, right, the higher time frame is always gives you more quality signals. But the problem is within 30 minutes, there can be a lot of up and downs, which will impact your prop firm. So your planning, your analysis will be always in the higher time frame. You see that, okay, if it is bullish above 43.16, it will go to 36, it will go to 43.57, it may go to 43.77. So you execute it in the lower time frame, like 3 minutes or 5 minutes, whenever you see a buy signal here. So now you know that higher time frame is in a bullish trend. So now you watch out for the only buy signals. Whenever you get a buy, you take a long position. And you got a sell, you just close the long. Don't open a short here. You got a buy, you open a long position. Whenever you get a sell, you just close it. So whenever your higher time frame is bullish, it is bullish above 43.16. This is 43.40. That means it can go all the way to minimum 43.57 today evening. Right? If it breaks 43.57, then it will also go to 43.77. So always use higher time frame to do the planning to, right? So generally, right, most of you are from IT background, so you always plan before doing coding or doing anything, right? You have a project plan, you have your testing plan. What in the same way, while trading also, you look at 30 minutes, you plan, is it bullish or is it bearish? Okay, it is bullish above 43.16. Price is 43.40. So let me only take the buy opportunities in the smaller time frame. Like that, whichever ticker you want. Okay, yes, 60 above 68.72, it will go to 69.02, 69.17. So that means now you only take the buy opportunities. Or let us look at UB, Ultra Bonds. Above 118, bullish. Below, that is bearish. So only if it goes above 118, you look for the buy opportunities. Otherwise, so now until 118, it is bearish. Only above 118, it is bullish. If it goes above 118, then it will go to 118.2, 118.3, 118.5 like that. So Google, Okay, above 311, it can go to 313, 315, 317.78. That means now, whenever you see a buy signal, you can buy the calls. You can do the bull puts like that. So now you understood each one individually, how to use swing indicator, how to use uh, RLM, FLM, SLM individually. Now you can combine them for more success. So you want to do day trading, but you are using the swing trade to understand the high level direction. Highly in a higher time frame, it is bullish. That means you don't look for a puts, don't buy puts for Google. So because you see that higher time frame, it is very bullish. It may go all the way to 318 or 320 tomorrow. So we only look for the calls or bull puts like that. So that is how you try to understand one by one indicator, and then you combine both the indicators. That is where you have much more success, because you are not just looking at one time frame and deciding whether it is bullish or bearish. Right? That also you can do by looking at the levels. It broke R1, then it will go to R2, and then it will also go to R3. Tomorrow we may see it going all the way to R3. But not only that, not only just by looking at, so here you are in a 5 minute time frame, whereas here you are in a 30-minute time frame. So now the combination will help you to make much more success, because the 30 minutes always have much higher quality signals compared to your 5 minute time frame. Right? In 5 minutes, you are only looking at a 5 minute candle and determining the direction. Whereas here you are looking at for 30 minutes, you are looking how is the trend, how is the overall buyers and sellers. So you have always, right, as you go higher and higher, your confidence will be much bigger. But when you go with so much high, right, for daily, within a day, there can be 5, 10 points up and down. There will be a lot of major moves within 1 day candle. So that's why whenever you want to do trading in 5 minutes, you look 30 minutes as the reference. Whenever you want to do 15 minutes as the reference, you look 1 hour as the reference. If you want to do trading in 1 hour, you use 4 hours as your reference. Like that, minimum 4 times you should have. So 4 to 6 times. So if you want to execute trades in 5 minutes, minimum 30 minutes. If you want to execute trades in 15 minutes, minimum 1 hour. If you want to execute, you want to be more like an investor, you can use 4 hours, and you can use daily here. If the daily is showing, for example, let us say Google, it is saying only if it goes below 292 is bearish. If it is above 292, it is bullish. Whenever it breaks 292, you can buy the puts, then it will go all the way to 269. That means whenever it breaks 292, you can open the puts for 1 month, 2 months later. Then whenever it goes to 269, you can make huge profits, right? So that's how, where you can hold the trade for 3, 4 weeks when you are looking at a higher time frame. But that won't happen quickly. You need to wait for 2, 3 weeks for to meet the targets. But whenever Google breaks 292, then definitely it will go to minimum 277. If it breaks 277, it will go to 269. So like that, you always look at based on, if you want more opportunities, then we look at 30 minutes as the reference, 5 minutes for your execution. So this is planning, this is execution. If you want to hold the trades for 1 month, 2 months, then you use daily here, and then you use 1 hour here or 4 hours here, and then you execute trades in the whenever you get a buy signal in 4 hours. Then if this is bullish and you get a buy signal here, then you go long like that. Then you can hold the trade for 3, 4 weeks without worrying. Then it may go all the way to 330, or right, you have a resistance somewhere at 327. So maybe next to one week, 2 weeks, it will go all the way to 327 in Google. So like that, you can, based on what type of trader you are, you have to use. If you are more of a, you want to take more trades, then you use 30 minutes for your reference, for your planning, and then use 5 minutes for your execution. If you are someone who don't want to keep watching the charts every day, don't want to take too many trades, then use daily here and use 4 hours here. In that way, you can. So that is very important where you need to understand what type of trader you are. Are you a scalper? Are you a day trader? Or are you a swing trader? Scalper means within a minute you will open and close the positions. Day trader means you will hold the trade for 3 hours, 4 hours, 5 hours, like that. Swing trader, you will hold it for few days or maybe few weeks. That is where you are a swing trader. If you are positional trader or investor, you will hold it for few months. That is where you will have weekly, right? You put weekly here and then you put daily here, and then whenever you get a buy signal in day, then you take the trade. Then you can hold it for 1 month, 2 months, 3 months also, right? For example, if you see Google, you got a strong buy somewhere at around $310. Or if you see gold, you got a sell signal somewhere here, 4,500. Now it is 43.40. So even if one contract, that would have made huge gains. So, but it will, right? You have to wait for 5 days, 6 days. Within that day, there can be a lot of up and downs. So you have to hold with patience. But it may come all the way to somewhere to the bottom and then again bounce. So in a higher time frame, GC is looking bearish. So bearish below 45.81, 44.06, 42.32, 40.58. These are the targets. So based on the weekly, it is overall GC is bearish in a higher time frame. So like that, based on what if you are mainly looking for day trading, then 30 minutes and 5 minutes. So 43.16. So if it is above 4316, it will go all the way to 4420. So yeah, there is a high possibility we will see a nice move up today evening once market opens with GC silver. Yeah, that's it everyone. I'll share the recording. Yeah, tag and yeah, the price levels will change for tag and turn. The levels will change based on the time frame. But if you are doing FLM, RLM, SLM, they will be same. They will be all the levels will be same in all the time frames for the scalping or day trading. So tomorrow, once we take the trades for a few minutes, then we'll do the setup. If anyone has the setup sessions. Yeah, Taral, I'll give you the access to RLM. Yeah, that's it, everyone. Please remember, right? The main concept is the levels, right? Whenever market opens, make sure where the price is. Is it at R7, R8? Is it at R1, R2? Is it at S7, S8? So remember that real estate example. Then immediately you know whether to buy there or sell there. That is where, and then wait for a engulfing candle, right? A nice bullish or nice bearish candle. It is not that immediately price touches, it will drop. Wait for, sometimes it will consolidate there. Whenever it goes to R8, S8, it will consolidate, wait, right? It will, buyers will try to buy it, sellers will try to sell it. It will be choppy for some time, and then suddenly you will see a nice bearish candle. So whenever we see that nice bearish candle at R8, that is where we can open puts or you can do bear calls. Yeah, bye everyone. Have a nice rest of the day. And yeah, if you have RLM, then yeah, you don't need SLM or FLM. But RLM is only for 6 months or above subscribers. FLM, SLM, you can take even as a monthly subscriber. Yeah, RLM is a combination of FLM and SLM. So yeah, if you are good with these two strategies, right? These two, one is tag and turn, and the RLM, FLM, SLM, that should be good enough for you. So price pulse is good if your mind is stocks trader, but for mainly for futures, prop firm trading or for options trading, if you understand these two strategies, what is tag and turn, what is RLM, FLM, SLM, we should be good enough. You should be able to make 80% or more successful trades. In the setup session, I'll provide the access tonight. Yeah, TNT is mainly for swing trades, mainly for 30 minutes. So if you get a bullish tag and turn in the morning in the first 1 hour, then you can even do same day 0 DTE. But if you get a bullish tag and turn or bearish tag and turn after 10:30, 11, then better you open the trades for next day. Don't open for the same day because when you have a nice 30-minute candle, sometimes there can be small reversal and then next day it may go up. Yeah, TNT is mainly for swing trading. RLM, FLM, SLM, they are mainly for scalping and day trading. Bye everyone. We'll continue in the evening in the live session. A nice rest of the day. Venezuela thing may not affect market already, right? On Friday it was going up because of the news already dropped and bounced back. So we may not see much effect because of that. But metals may go up. Yeah. Today all the metals are bullish for overnight. ESNQ may be little choppy overnight, and tomorrow you will see a bullish price action. But metals will be more bullish. Crude oil also, let us look at crude oil. So 58 point, only it is bearish below 58.44. As of now, yeah, 58.44. Crude oil is also looking bullish. It can go all the way to 58, 58 point of 58.5 is a potential target tonight. Yeah, I'll share Tesla and Amazon levels tomorrow. Bye everyone.